Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our AI and Technology Conference. We have a full day of 15 innovative companies presenting. Our first presentation of the day is from Pinewood Technologies. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Bill Berman. He's the Chief Executive Officer of Pinewood Technologies Group, which trades on the OTCQX Best Market under the symbol PINWF and on the LSE under the symbol PINE. Welcome, Bill.
Thanks, Sean, and good morning, everybody, and welcome to Pinewood.AI's full year 2024 event. If you go on to slide 4, a rough breakdown of how we started out the year. So this is our first year as a standalone software company. At the end of 2023, we sold all of the assets to Lithia, the large UK retailer, and we spun out as a standalone SaaS automotive technology platform at the beginning of February of 2024. For 24, we delivered ahead of analyst expectations, which were at 7.8 million, and we came in at 8.5 million pounds. We had a strategic transformation successfully completed. We laid the groundwork for significant future growth. We delivered against the target set out at our Capital Markets Day in October. We signed 2 major UK customers, Marshall's Motor Group and Lookers Motor Group. Marshall's in October of last year, and Lookers February of 25 of this year. We also had the acquisition of Seez, which is the AI automotive technology company, funded by an oversubscribed equity raise and retail offer, which will enhance Pinewood's AI capabilities and unlock significant opportunities within the sector. Progressing international opportunities as well, both in Central Europe, Africa, and Southeast Asia. We've been making excellent strides in commercializing Pinewood's North American product with a pilot launch on track to begin in the second half of 2025. Moving on to slide 6 and our financial highlights. For FY24, we're going to be comparing against an 11-month, February through December, FY24 versus FY23. On a revenue basis, we had 31.2 million pounds of revenue, a 15.1% increase versus the prior year. Our gross profit rose by 16.5% to 28.2 million, and our underlying EBITDA of 14 million, up 7% versus prior year. On a recurring revenue basis, we were at 86.5%. We traditionally run between 85 and 90. Last year, we were down 1.8%, and that was due to implementation revenues that came in from the installation of Jardine's Motor Group onto the platform. We had an underlying PBT of 8.5 million, and we increased our user count by 6.3%. One notable metric on here is our net churn at 1.1%, which is a company record and an all-time low, and has been supported at less than 1.5% for the last 5 years. Moving on to slide 7 and cash flow. 4.3 of the 4.5 million bank interest received related to the non-underlying interest received while special dividends were being held. 395.4 million of proceeds from Lithia's transaction were ultimately paid out to our shareholders. 10 million investment in investment in a North American JV with Lithia. We had another 3.2 million investment in the initial Seez investment in September of 2024. We had a special dividend of 358.4 million pounds related to the Lithia transaction, as did the 93 million loan repayment and 30 million of share capital issued. 9.3 million of cash at the end of FY25. And in addition to that, we received 9.9 million received from post-year end. This is at the end of March. We're getting a tax debtor that was received from Lithia. Moving on to our balance sheet, movements in shareholders' funds driven by special dividend paid following completion of the Lithia transaction. Investment in associate of 9.6 million US JV with Lithia. We had other investments of 3.2, an initial investment in Seez, and 16.3 million of capitalized development costs were affected in the growth of software development. 21.4 million of receivables, included 9.9 Lithia tax debtor that we received in March of 25, and 9.3 million of cash at the end of FY24. The group also has a 10 million pound unutilized RCF. On non-underlying items, we had restructuring costs following the Lithia transaction of 2.2 million pounds and costs of 0.9 million pounds. Share-based payments of 1 million pounds. In addition, interest of 4.3 million received while special dividend was being finalized. And lastly, 0.5 million charge relating to the share of the JV cost. Moving on to operating highlights and growth. We had strong revenues driven by efficient completion of the Lithia UK system rollout at the end of last year, focus on our vertical sales channels to existing customers, as well as new customer wins. Our total users increased to 35.2 versus 33.1 in FY23. That's an increase of 6.3%. And as I stated earlier, we had a net churn of 1.1%. In addition to that, we have closed a 5-year contract with Marshall Motor Group, signed in October to implement the Pinewood systems into their 120 UK dealerships. As far as our North American rollout preparation, we've engaged with all the major US-based OEMs. Our product and development teams are making good progress in enhancing the system to US-specific needs. We remain on track to pilot our system in the second half of 25, with the Ryder rollout beginning in the second half of 2026. We'll be opening a North American office during 2025, and we're in discussions with Lithia to simplify the JV structure. In addition to that, we have a new customer experience, UX, for all Pinewood system customers to be launched in 2025. This is on a hyperscale platform and will give us the ability to go into future markets and is a core competency to break into the North American market. Development of this new UX has been taking place over several years, and it's the key steps in the evolution of the Pinewood system. And this will be used on all future installations, Marshall's Lookers, and it will be launched in the second half of 2025. Post-year-end events, we signed a significant contract with Global Auto Holdings. It was a 5-year contract to put into all of their UK, North American, and Scandinavian stores. Given the scale and the unique nature of this contract, Pinewood issued warrants to GAH, representing 7% of the pre-equity share capital of 87.1 million shares. Up to 5% of this would be released once the UK installation, 1% for North America, and 1% for Scandinavia. The warrant shall be exercisable at a strike price of £3.30 and subject to satisfactory completion of the Pinewood system rollout. The intrinsic value of the warrants to GH is difference between the share price and the strike price. The warrant holders only benefit if the share price exceeds $3.30, and this is on a cashless basis. In addition to that, post year end, we acquired Seas. We did this with an oversubscribed equity raise, and we raised over 35.7 million pounds with strong support from existing and external shareholders. Fundraising enabled Pinewood to acquire the remaining balance of Seas, a leading automotive AI and ML SaaS platform. This enhances the Pinewood's in-house capabilities, particularly in development and deployment of AI chatbots to customers and sales support, proprietary modules for vehicle appraisal and inventory management, and AI-powered digital marketing tools. 26.7 million of equity fundraised used to fund the cash component of the Seas acquisition. Remaining proceeds, net of transaction fees, will be used to fund the continued execution of Pinewood's growing pipeline of opportunities. On slide 16, and this is a very important slide. This is a slide we put out in October of 2024, and these are our 4 key pillars for our strategy on a go-forward basis. At that time, we announced that we were targeting to acquire 2 of the top 20 UK auto dealer groups, and we have accomplished this with the signing of Lookers, Marshalls, and in addition to Lithia UK. On an international basis, we have growth in Scandinavia. We have a unique opportunity in Germany, Austria, and Switzerland. We've also signed the stores for the Alpha Auto Group, part of GAH, as well as have an opportunity to roll out our product through Global Auto Holdings for KW Bruin distributorship. On the vertical sales channel, our vertical sales channel products will be these chatbots. We already have a commitment from Lithia to roll these chatbots out in all their US and UK dealerships. And then lastly, in the fourth pillar of our strategy is our entrance into the North American market. We have signed 2 contracts before we have even launched. That is with Lithia, as well as Global Auto Holdings, known as Alpha Auto Group within North America. On an outlook basis, our priority in the UK in FY25 is to begin system implementations with Marshalls and Global Auto Holdings, i.e. Lookers. Having strengthened our sales team, we will look to add more top 100 dealer groups to our current customer base. Outside the UK, the geographies identified at our capital markets event in H2 2024 are our priority, namely North America, Central Europe, Japan, Southeast Asia, and South Africa. We'll be rolling out our new user experience, key focus for 2025, and the board remains confident in the prospects for the group and expects underlying profit before tax for the full year to be in line with the consensus. Previous guidance of 30 million of underlying EBITDA in FY27 is going to be increased to the range to the mid to high 30 millions. Now we will take any questions that you may have. First question, in terms of the commentary around the potential scenarios for the US JV, without sharing too much, could you just talk us through what kind of range of scenarios you would expect to see? So Lithia has been nothing but a great partner for us. And in looking at the opportunity in North America, they see it to be a huge opportunity. The current structure was part of the deal that we closed at the beginning of 2024. And in such, Lithia has a 51% stake versus our 49% stake. And as it growing into the market, we see that as a potential hindrance. Lithia agrees, and we're in discussions with them to find a creative way to be able to buy them out of the JV. But the scenarios around that could be after a third-party assessment of the valuation of the JV could consist of equity, financial instrument, and/or cash, or a combination thereof. That said, Lithia has been nothing but a great partner and supportive of our movement into North America. They've given access to their stores, to their personnel, and have given us hundreds upon hundreds of man hours in support. So they've been nothing but great partners. Let's see here. Second question, just on the international pipeline, it sounds like there's progressing quite well. You've clearly had great success in the UK. Is there any kind of different dynamics that we should be aware of in terms of winning new customers in the international market versus the UK? Yeah, every market is just a little bit different. There's localizing that needs to go on. The way cars are sold, the way the OEMs are involved in that sales process varies drastically. But I will say the one unique thing about our product compared to most of the competition out there is we are on a single code base. So the system is the same no matter where you're at. We're language agnostic as well. So it doesn't matter if you're in the UK, if you're in the US or South Africa or Germany, everybody's on the same system with certain localizations to handle any, regulatory or governmental or, regulations that need to be, kind of worked through. That being said, the product stands tall and is definitely a top quartile product within the marketplace. It gives the ability to sit here and work across borders. It also, on a large enterprise level, if somebody has multiple stores in multiple geographies, we have a unique system where you can have the same product no matter where you're at. So what we've seen is in Europe, especially, OEMs like our product, and they're actually pulling our product into the market for us and are opening doors for us. So if anything, the way the product was developed, being part of a retail automotive base, has given us the ability to break into multiple different markets. Great to see upgrade for 27 medium target. Can you touch on what kind of visibility in terms of short term, but maybe going on to FY27, given a range of mid to high 30s? How do you think about that? And I guess in terms of visibility that you have to that point. Well, we can't get into kind of the secret sauce, but with the way our system works and the implementations, we're going to be starting implementation with Marshalls and Lookers this year. We'll be finishing those through Q2, Q3 of next year. Just the way our product and our costing cycles work out, we'll get a full year revenue swing on both of those large contracts, nearly 300 dealerships between the two. And those will be realized on a full year basis in 27. In addition to that, we have the addition of C's and the revenue that they're currently generating. They ended last year on a run rate of 4.4 million and are tracking significantly higher than that through March of this year. We have the addition of the chatbots going into the Lithia UK and the US stores, plus various other customers that are coming onto the platform. Various vertical sales are going on top of that, not counting some of the international opportunities. So that's what kind of gets us from the 14 million in EBITDA in 2024 to our mid to high 30s in 2027. Can you discuss your sales cycles? Are you replacing existing systems or siloed installations? In just about every single case, we're replacing existing systems on core technology platforms, sometimes referred to DMSs. We're much more than a DMS. DMS normally is an accounting-based platform with APIs written into it to allow various other third-party layered apps or products to be connected into it. While we have those capabilities, we are a complete ecosystem, a platform that you can facilitate the entire front-end sales, service, back office accounting, and OEM integration processes. So in just about every case we're replacing an existing system, these systems are incredibly sticky. The average life cycle is in excess of 20 years. Off of the last 2 years, our net churn has been just over 1%. So we don't lose users or customers often, and when we do, it's normally because the dealership has been sold and gone on to possibly a different system with that dealer group. So the only real challenge on the sales cycle, back to the stickiness piece, is from initial contact to demonstrating the product, building a business case, getting a commitment for a deal, being able to sit here and do the behind the scenes work for implementation can take anywhere from 9 to 12 months. And then oftentimes you're working around different contract period on existing systems. So you kind of have to work through that kind of stuff as well. But our product is in high demand. It is highly sought after by the OEMs. We have their support and their certifications, and it gives us a unique opportunity within the marketplace. Can you talk to your go-to-market strategy in US and expectation over the next 3 years? So right now, I talked about that we already have the contract with Lithia. They have right now 315 stores. They're the largest automotive retailer in North America. In addition to that, we have the Alpha Auto Group and their 16 stores, and they're quite large stores. There is tremendous amount of interest that is coming our way. We will be starting to launch a sales and marketing strategy in the second half of this year. We'll be presenting at NADA, which is an automotive conference and the biggest, I think, automotive conference worldwide in Las Vegas in the first week of February. And we already have a significant amount of interest and opportunities coming at us right now. So currently we are building OEM integrations, different very layered integrations into financial institutions, tax title and licensing platforms and as such. Like we said earlier, we'll be testing and doing pilots second half, maybe closer to the fourth quarter of this year, and looking to start full-blown implementations on scale by mid-2026. With the hack that happened in the US within a similar type product, what steps have you been taken to ensure this won't happen to Pinewood.ai? Not giving the secret sauce, but we are built on a modern platform with the highest amount of security you can possibly have. We are 100% Microsoft Azure based, protected by Microsoft Defender, Cloudflare, and several other security protocols, plus some in-house protections on top of that. So without giving anyone a challenge out there, we have as high of security you can have within this segment. it's top priority. We're always looking at it. We know it's a risk, but we have redundancy in place as well. So if something ever did happen, we have the ability to switch over and keep our customers functional. Can you talk about Seez, the AI company you acquired? Does this give you a leg up on the competition? Yeah, we're really excited about Seez, and we think it is a really unique opportunity for us on a go-to-market strategy. We are built on a modern tech stack. Seez is built on a similar type platform as we are. And what we're looking to do is allow Seez to run as they currently are as a standalone company. They have great market penetration in Australia, Mexico, Middle East, South America. At some point in time, we could utilize their products there and be able to introduce our products alongside theirs and gain openings into those markets and additional market share that way. What we're really excited about is the products that we can develop together, and how can we combine the two systems where it's seamless. And this will give us competitive advantage in the marketplace, where as others are starting to use AI, and AI is now a mainstream within automotive technology, but these are all on overlaid on top of websites. They're kind of bolt-ons to facilitate certain aspects of the sales or service journey. We're going to be able to incorporate the Seez system into our system and give us the ability to have bots handle everything from a full online transaction with no human intervention to being able to schedule, service, dispatch, and allocate work into the shop. And ultimately use AI to be able to better service customers by using predictive indexes and being able to communicate more accurately in a more timely way with customers. One of the things that's really important in AI is data. Most AI companies are screen scraping, pulling data off the net. One of the real value propositions for us is the value of our data, and we have one of the purest data stacks. Since we don't use a lot of third-party layered apps and bolt-ons, we have an incredible data stack, giving Seez and that engine access to that data to be able to power a better customer experience. We truly feel will give us a competitive advantage going forward. What sets you apart from legacy competitors, incumbents in the space? I think if you go off a North American context, there's three large incumbents. They've been around for a long time. They're on maybe a less modern tech stack. They are, as I described earlier, more on that kind of a DMS or accounting platform. They utilize a lot of layered apps. Some of them they've developed, they've acquired, or they've written APIs into to allow for functionality. In our system, we do have that capability, but our system is designed to be a platform, an ecosystem to allow a customer, whether it's sales, service, within a dealership, back office accounting, or even integration with OEMs, all of that to be able to be formed on a single platform with a single entry point, the single log on, and be completely complementary to everything. So when you're going in and working on things here, you have one entry point, one window open, and you can transact in any way that you and or the customer deem appropriate. Looks like last question here. Any sort of color you can give us on progress that Tekion is making, given that a bit of a foreigner what's going on this way? Yeah, Tekion is probably the closest competitor in North America right now, built on a great tech stack. I would say that the difference between us and them, well, first off, there's in excess of 20,000 dealers between Canada and the US, so it's a large market. The top four current incumbents have nearly 80% market share, so it's a large market. The difference between us and Tekion is, while we're looking at ourselves as a kind of a 20-year-old startup, so we're in 21 countries right now, over 2,000 rooftops, in excess of 35,000 users, and we've got 20 years experience on this. We've got a tried and true product, but built on a modern tech stack with our new UX, even uplifts that even more. We've got the experience and the know-how and the expertise, and I think we're going to be, good but fair competition to Tekion. Market's big. I think they will come out and do well, but I think we'll come out and do hopefully even better. Do you just work for dealers, or do you work for manufacturers as well? No, our product transcends both on the retail side of the business as well as the OEM. So we have full OEM integrations. In some cases, we actually build and support OEM-specific products or processes that they're looking for. We'll be announcing soon a collaboration with a major OEM on being able to power one of their internal systems, which we're really proud of. But most of our customer base and most of our revenue comes in from our dealers. And with that, I think we're done. Thank you, everybody.